right. Are you with me?
Yes, sir.
So it's when liquidity has been taken on the downside, you have price protecting lows until you have the liquidity taken at the opposite side. All right. So today we are talking about day six, which is mastery. It might be a kind of a long session, so
Oh,
we just have to finish it today. So the first thing we're going to talk about is trade and risk management. All right. Because you engage into a trade, you need to have an exit point. You need to be able to know how to, you need to be able to know when to break even, how to find a re-entry, your target and partial, and the amount of risk you are going to use. All right.
yes, sir.
So the first thing is a break even. All right. Whenever you get into a position, you don't just break even because you feel like you need to break even. There are certain things you need to look out for before you break even. And the first one of them is entry at extreme. Okay. What it means if you get into a position at the extreme of the trade, let's say you snipe the trade,
Yeah.
all right. If you snipe the trade, what it basically means is you can easily break even when you have what? At least 1:3.
Brother Fiber.
Sorry?
Brother Fiber, is it possible to explain that buy in the future or later?
What is that?
The buy you deleted, you cleaned. The buy on the chart, you draw something. Yes,
This,
no liquidity exactly. It had no liquidity, but it had
you mean,
you.
you mean this buy?
Yes, exactly.
All right. So basically, the reason why I took this buy was because number one, the points where price is coming from. We have price coming from this efficiency, all right,
Yes,
on the 15 minutes time frame, and above where price is coming from above is very important also. Okay, you could see that this is a mitigation, and we have what series of build up right here.
you're right. Yeah.
All right, so it's like there's a high chance this is not an MACPOI. There's a high chance price drive higher. We see have series of build up above.
Yeah.
You have build up right here, and you have build right there, and
Could we take that also the last sell for Friday?
the last. Okay, I missed this sell. I missed. I was expecting price to push higher. Okay, I
Okay.
actually wanted to engage into the sell, but I
Exactly.
just left it. It doesn't fit my rule, so I left it.
Oh,
Okay, it's actually a good sell because if taking the liquidity and price is having so um
aggressive.
price is having price created a weak low right here. This is a weak low
Yeah.
reacting off nothing. Okay, only took liquidity, but we don't have an efficiency, so this is a what? A weak low. That is why I expect price to at least push higher before dropping. But unfortunately, we don't have that. We have what? We have this also right here. Okay, so coming back to this buy, all right. All I need was what? I want liquidity to be taken before I engage into my position. Okay. So liquidity was taken right here. A 5 minute liquidity was taken, but we had a failure swing. Okay. We had a failure swing coming to the downside, which means there's a high chance price take this low because we have what? A failure swing. Then I have what price giving a retracement, keeping in mind that the point where price is coming from above is not from a liquidity level.
Yeah.
Okay, which means this high is a weak high. Now, I just have to do was look for a possible liquidity taking before I engage in the buy. But then I keep seeing price drop down, give a reversal, drop down, a reversal, drop down, a reversal, which simply means what price is exhausted.
Yes.
Okay, it simply means what price is exhausted. That means it cannot break above below this low. Same thing we have right here. Price was struggling to break above this high, exhausted. So just have to drop. Same thing happened here also.
Yes, sir.
So before I engage in my position, I need liquidity to engage. So price took out this low, and I use transactional liquidity to engage into my buy position because this low overall is a low that has taken liquidity. Okay, which makes it a strong low.
You're right.
Okay.
Yes.
Yeah. So, any more question?
No, thank you. Thank you. For now, it's fine.
All right. All right. So the next thing is entry at the extreme. It means after your delivery, your behavior, then your candle closure, maybe to some extent you are able to snipe the position after liquidity being taken.
Exactly.
All right. If you're able to snap the trade after liquidity being taken, we just took a liquidity on the left right here. Okay.
Yes.
So you get into the position, let's say around this level. Okay, this is like a snipe trade. Okay. The moment you have what? Price at the 50% of the initial push. All right. You have this high, okay, and you have this low as your range. The moment price got to the 50% of this range, all right, you can break even.
Break even.
Yes.
Very
The
good.
moment price is at the equilibrium, the 50% of this range, you should break even your trade. Okay, because if price should cross this low and get down, it means what we are at the buy zone that there's a high chance price do what? Go higher.
Exactly. Okay. Okay.
All right.
So for this sale, this is 50%. Yes. Sorry. Here.
Yes, exactly. Yes, yes.
For example, here.
For this, if you take a sell right here, the 50% is this push.
Oh,
If you take this sell right here, the 50% is this push from this high. All right, from this high. So this low is your 50%.
yes.
So the 50% is the midline within it. All right. So if you take a sell from here, if price gets to this, you should break even. That is if you snipe the trade, if it's at the extreme. If it's at the extreme, you should break even. Okay.
Exactly.
All right. So that is the first thing you need to consider. The second one is what? Price at equilibrium. Okay, which is also similar to the extreme. If, for example, you didn't snipe the trade. Okay, if for example you didn't snipe the trade, you are using a pure candle closure. So that means your entry is like this. Let's say you have this kind of entry, right?
Yes.
If price should get to the equilibrium, okay, you can also break even.
Break even. Okay. Okay.
Sorry? Price at equilibrium? No. If you use a candle closure and you still have an unmitigated entry, okay, it means what? You need price to take a structure point at the opposite side for you to do what? Break even.
Break even.
Are you with me?
Yes.
If
Actually, can we see a
you use a
example?
if you use a candle closure and you still have an inefficiency at your entry point, like
You
let's say
mean
for
above?
example, you take a buy from here,
Oh,
okay?
you mean above or below?
You still have inefficiency like this. This is your entry, for example,
Yes. Yes.
right?
You're right. Yeah.
The time you are going to break even is when you take what? An opposite liquidity, which is possibly this.
Thank you.
Okay, you should break even. Then we have a mitigated entry. A mitigated entry is when you have your full entry fully mitigated. Let me show you an example. If you have your entry fully mitigated, yeah, it's something like this. If you take a buy from here, right, this is a mitigated entry. Price comes back to re-mitigate your entry.
Yes.
Okay, price comes back to the mitigated entry. That means at the 50%, which is this is your high and this is your low,
Yeah.
right? The 50% is, sorry, this is your high and this is your low.
Yeah.
Okay. The 50% is this. So you should break even.
Yeah.
All right.
Yes, sir.
That is if you have a mitigated entry. Remember, a mitigated entry. That means you have your entry fully mitigated. That means there's nothing that is bringing price back to your entry. And anything that's going to make price come back to your entry, it means what? Price is likely going to break through your entry.
Yeah.
Okay.
Yes, sir.
All right. So that is the third one. The fourth one is a true break of structure. The fourth one is a true break of structure. If you are taking a 1 minute or 5 minutes inducement level, an example is this. You have a fake break of structure right here, right? On the 1 minute, and you have an inducement, all right? And you have true break of structure. The only time you have to break even is when you have your what? Your true break of structure. Okay? Your true break of structure right here, because this is a 1 minute inducement level and it is two-way close to the true break of structure. Price can still come back to the mitigator entry until you have a true break of structure before you can consider what breaking even. Another one is if you have just true fake break,
Yeah.
inducement into this efficiency, the only time you have to break even is when you have what? A true break of structure.
You're right.
That is the only time you have to break even. I hope you understand the break even rules right here.
Yes, yes, sir.
All right. So for the re-entry, the first thing you need to consider in a re-entry is what? You need to make sure your first entry has to be at break-even. That means it has to follow the break-even rules. Okay, that is why I said it's one entry is okay. But if you think you need to look for a re-entry, you need to make sure the first entry is at break-even. All right. Your first entry is at break-even. This is your entry right here.
Yeah.
Okay. This is your first entry right here. And you're possibly targeting this high. Okay. You're targeting this high. For you to find the re-entry, okay,
Yeah.
you need to make sure your first entry that was down below must be at break-even. It is capital protection first.
Yeah. Before making money.
Before making money. Perfect. That is why you need to make sure your entries are break even first before you think of what making another money. In case, let's say, for example, the second entry you're looking for is an invalid entry, right? And price decides to violate it. It is going to violate your first entry, your second entry, and also violate your first entry, making you lose times 2. All right. So you need to make sure you protect your capital first before you ever think of making money.
Exactly.
All right.
Yes, sir.
So that is what the first rule is all about. The second rule is every re-entry must be an MSU. That means you need to have a fake break of structure, just like what we have right here. Let's say if I'm looking for the entry, this is my first entry. My second entry must be an MSU. Okay. Your second entry must be an MSU before you think of looking for what? Another entry.
Yeah.
Okay. So that is what it's all about. You need to make sure your first entry is at break even, your second entry should be an MSU, and retracement isn't coming from what illiquidity level. This is an example. Let's say you want to find a re-entry, right?
Yeah.
Uh, you need to want to find a re-entry. This is your re-entry. Okay.
Yeah.
You need to make sure your Okay, you're seeing a retracement. You already have a fake break inducement, looking for the entry. That means this high is not coming from what? A liquidity level. As you can see, no liquidity being taken. That is what the third rule is all about.
So price shouldn't come from liquidity level. Shouldn't come.
Yes, the retracement is not from a liquidity level.
Or
All right.
or it should
A liquidity,
come
a liquidity
from,
level
yeah.
or a mitigation.
Thank you.
Okay, it shouldn't come from a liquidity level or a mitigation.
So this level was a liquidity, but price didn't take it.
No, it's not a liquidity.
Oh yes, actually it's not. It's nothing.
Yes, it's not a liquidity. All right. So you need to make sure if you're looking for the entry, it must be an MSU and not coming from what? A liquidity level. All right. Let's say I'm looking for another re-entry now. This high, is it coming from a liquidity level? I won't consider this as a liquidity level because we still have what? Stages of build up above. So if I'm looking for the entry, it has to be what? A mitigation of an MSU. This is valid. And also we have a liquidity, a structural liquidity right here. So I might look forward a re-entry right here.
You're right.
Yeah. Okay.
Yes, sir.
So you need to consider if the high causing the retracement is not from a liquidity level, assuming we took this, then it might be a strong retracement. But there's a reason price did not take this liquidity because it wants to what? Build more liquidity above. All right, you understand the logic now?
Exactly. Yeah. For example, here it's build up again.
Yes, it is a build up. So in this case, we've taken a liquidity. Now, if I'm to look for the entry, this whole range has what? Has inefficiency. All right. In this case, if I find myself in this level, I would rather look for a sell opportunity like this.
Yeah.
Okay. To go take all these lows, including this last build up. Okay. So this is going to be the only place I'm looking for an entry. The only place I'm looking for an entry. So I'm going to capitalize on a sell to buy because all this is what is a build up. Okay, you don't expect price to mitigate this again because this is not an MSU. Price cannot mitigate this. Then keep buying.
Yes.
Okay.
It's mitigation of inducement.
Exactly. So I'd rather wait for this to be taken than waiting for price to mitigate it. All right. So back to what we're talking about now. For target and partial. All right. If you're taking a 1 minute and 5 minutes inducement level, your target and partial should be the true break of structure on the 1 minute and 5 minutes. But ideally, I would advise you don't take partial for 5 minutes and 1 minute inducement level. It's going to mess up your reward.
Yeah.
Right. Imagine you're taking this inducement level on the 5 minutes and you're targeting the true break of structure right here. Yeah. This is just 1:, probably 1:5. 1:5. Okay.
Yeah.
1:5, for example. Meanwhile, price still has a potential to drive to the downside because there is no liquidity to be taken yet. Okay, if you notice, this buy is coming from what? A 4 hours efficiency.
Is it possible to explain the reason of this buy and this sell because price didn't mitigate it?
What buy?
This buy and this
okay.
Sell. For this sell, we don't.
Okay, now let me explain something for you. You see this sell off right here, right? This sell.
Exactly, no mitigation.
No mitigation. Okay, which signifies was if price is coming back to this level, this is a weak high. Okay, we still have what? An efficiency above it. Okay, whenever price is trying to buy to the upside, it is going to first of all build liquidity. To build liquidity. That's why you have all this right here and you have this high right here.
Yeah.
So price is going to build liquidity first before it will determine to go higher or not.
Yes, sir.
That is the reason why you have this high right here. So this sell came up This sell came down to mitigate what the 4 hours efficiency in order for price to what drive higher.
Yes.
Okay. So that is for 1 minute and 5 minutes. Then for higher time frame liquidity level,
Yeah.
you need to focus on what a higher time frame liquidity level. If you take your sell from a 1 hour level, right? You need to what target a 1 hour liquidity for what your target. Let's say if you are selling right from here, okay, your target should be what a 1 hour liquidity and another 1 hour liquidity.
Yeah.
Okay.
Yeah. جانم الو سلام جانم قربون سر کلاس نه تکس بده تکس بده خب بیا خب
Right here,
sorry brother
your target is what a 1 hour.
I couldn't hear you for 1 minute and 2 minutes. Sorry, I had an unstable internet connection. Could you repeat your?
So okay, what about now? I mean, if you take your position from a higher time frame liquidity like 1 hour or 15 minutes,
Okay.
you target the next 1 hour liquidity.
Okay. Yes.
Okay, you target the next
Yeah.
1 hour liquidity.
Yes, sir.
Any question?
No, it's fine.
All right. So the next we have is time, right?
Yeah.
If you are taking a London position, are you with me?
Yes, sir.
If you are taking a London position, your partial and target should be what? 12 p.m.
Okay.
If you're taking a New York position, the target should be what? If price did not give you the reversal between 3 to 4 p.m., then 6 to 7 p.m. Are you writing?
Actually, yes. Just I have a question.
These are the target for.
Is in London timing, yeah?
Yes.
3 p.m. London, 7 p.m. London, yeah?
Yes.
Okay. Nice.
All right.
Yes.
So that is that about that.
Yeah. If it didn't give us reversal, so we can hold it, yeah?
You can hold it, exactly. You can hold it. Okay.
Nice.
So do you have a question?
No, not for now. It's clear.
All right. So the next we're talking about is risk. Now, the thing is, one thing about trading is you need to understand your risk appetite. Like you need to be able to know what you can accommodate in terms of risk.
Yeah.
Okay. You need to be able to know the amount of risk that you can take that won't hurt you. Like me, I can risk 1% on a trade and I'll be very, very okay. There are people that if they risk 1%, they are not going to be okay. There are people that they can't risk more than 0.5, and there are people that risk 2%. Okay,
Yeah.
so you need to understand your risk and be able to tell how to manage them.
Yeah.
Okay, for stop loss, right? I don't advise nothing less than 3 pips. The least is 2.5 pips.
Yeah.
Okay, so you don't go lower than 2.5 pips. So,
Yeah.
all right, your stop loss maximum minimum should be 2.5 pip.
Yes. Sir.
All right, you don't risk more than 0.7% per trade. For now, you don't risk more than 0.7% per trade.
Yeah.
All right.
Yeah.
Not more than 0.7%. You can start with 0.5, then later 0.7, then later 1%.
Yes. Sir.
Okay. So maximum of 2.5% account drawdown per day. If you are trading in $100,000 account, the max you should go is $2,500. Then you should risk and continue the rest the next day. There's no point in trying to make back what you've lost. No, just be disciplined enough to be able to wait the next day to re-strategize and reanalyze.
Yes.
Okay, so maximum 2.5% per day. All right. The most important thing is trying to protect your capital.
Yeah.
Okay, try to protect your capital first before you think of making money. And if you can't protect your capital, there's no way you're going to make money.
Exactly.
Okay.
Yeah.
So,
Janamo.
no question. No question.
No question. Yeah. Hope زودتر بگو.
All right. So let's move further.
Good.
Now let's talk about the trade plan. Are you with me?
Yes, sir. Sorry, my dad called me. Yeah.
Oh, just take your time.
Oh no, it's fine. It's fine.
Okay.
Okay.
So let's talk about the trade plan. How to apply it. The trade plan is a very, very detailed something that you need to put in your head. You need to be able to, remember them when trading, or you print it out and place it somewhere in your room. Okay, or on your screen. Just do what you have to do to be able to see these things every day. Okay, so we have two categories of time frames. The first one is 4 hours, 1 hour, 15 minutes, which is your higher time frame. The lower time frame is your 5 minutes and 1 minute. All right, your 5 minutes and 1 minute. Now, the fiber essentials are the things you need to take note of to be able to have an intention of what price is going to do.
Yes, sir.
Okay, to have a clear direction for the day. The first one, which is the most important one, is what? A higher time frame IPA and a lower time frame BW. These are the two things that tells you where price is going to. Okay, you trade towards a higher time frame IPA and a lower time frame build-up level. So if you find yourself around a point where price creates an inefficiency, all right, you are more likely to go towards the inefficiency than what? Go to the downside. So an IPA level, or you have what? A build-up level like this. Yes, I can hear you. I think my internet went off. Sorry. All right. So back to our explanation. Are you following? So higher time frame IP and lower time frame build up level are the targets you'll be trading towards. All right. If you take a position, you need to make sure you are covering an IPA or you are trading to clear a build up level. All right. Where price is coming from versus where price is going to. It's really important to know the intention of price. If price is coming from a liquidity level, then you can have you can have a chance to know that price is going to what give a deeper move than when it is not from a liquidity level. Okay. Transfer of money after higher time frame liquidity is taken. Okay. Whenever you have, are you with me? Hello. Okay. Okay. Transfer of money whenever you have what a higher time frame liquidity taking. Okay. And you see price protecting the lows, you have to trade towards what the transfer of money to clear inefficiency or to clear whatever buildup you have right here. MSCPY, a high probability if it follows order flow or trend. If you are trading a higher time frame continuation and you see a lower time frame MSCPY that follows the trend, all right, this is a high probability of what? Point of interest. Are you with me? All right. Yes, it has to follow the trend to be able to understand that what this MSCPY is going to hold. If you have a higher time frame failure swing, you trade from it after taking an extreme structural liquidity. All right. If you have a swing point like this, okay, and price goes all the way to this high, take out the structural liquidity before the extreme high and started selling. You have to what? Trade from trade from it. That means you trade from it to the downside until you have a liquidity taken at the opposite side. A higher time frame liquidity level for high probability reversal. That means your 15 minutes and above liquidity level are the liquidity you are going to focus on. Okay, 15 minutes, 1 hour, 4 hours. These are the liquidities you are going to focus on. All right. Mitigation of IDM and EPA for trend continuation. Sorry, can you give me 1 minute, please? Let me reply to the delivery guy. Hey, brother, sorry. All right. So, do you have any confusion or any misunderstanding with these essentials that you need to understand? Okay. Okay. No, no problem. No problem. No problem. Yes. Yes. Sure. Sure, brother. I'm always available. All right. So going to the trading time, UTC plus 1, this is my time. You have to convert this time to your own time. All right. So you go to the chart for the day, 7 a.m. to prepare for London. Whatever session you are trading, if you're trading London or New York, you need to go to the chart 1 hour before the session so that you can understand what has happened the previous session and prepare yourself to trade the next session. Okay. Stop trading London by 11 a.m. That means from 11 a.m., you're going to be seeing what's a low volume or low volatility in price, and price might not necessarily, whatever entry you get by 11 a.m. might be taken out by 12. So it's just better to leave the chart by 11. Always good to give a 1 hour break between a session. All right, start trading New York by pre-New York, which is 12 p.m. Okay. By 12 p.m., you most likely going to get an entry for New York itself. So you get whatever New York is trying to say by pre-New York. All right. So stop trading New York by 5 p.m. and leave the chart for the day. So it's always good to know when to leave the chart and, give yourself break for the day. All right. The time frames you need, like I said, are this. So I've explained it. The time frames you need, 4 hours, 15 minutes, 4 hours, 1 hour, 15 minutes for overall direction, EPA and liquidity. 5 minutes for build-up levels and MSCPOI. All right, 1 minute is a detailed MSCPOI and entry confirmation. That means your delivery behavior, your two push manipulation, or your candle closure. It's on 1 minute time frame. All right. So 5 minutes is basically for, to see it. MSCP, if your MSCPI is on 5 minutes, then it's more valid. All right. Also, if you have your build up levels on 5 minutes, it's more valid. So the 1 minute is basically for entry itself. All right. So confirmations. These are the confirmations you need to pick a certain trade. These are the confirmations you need to pick any trade. All right. It might not be, you might not have everything in place, but at least you have majority in place. The first one is what? The trend. That means if price is to the downside, you are looking for what? Sell. If price is bearish to the downside, whatever sell you are looking for, okay, is quite valid because price is bearish to the downside. Build up towards the trade direction. If you are selling, you need what? A build up towards the trade direction. Okay, build up towards what? The trade direction. That means you want price to come for all this build up below. Okay, either a build up or an IPA. I'm going to readjust this. All right. So higher time frame, fake break of structure, then inducement liquidity or structural liquidity. That means you need what? A liquidity to get taken. Okay, higher time frame, fake break of structure, inducement. All right. Then what? Either a structural liquidity, it doesn't matter as long as you have an inducement. If no fake break of structure, that means you need what? A transactional liquidity. You know what that means, right? Let's say price did not give you a fake break of structure like this. Okay. That means you need what? A TLQ to sell from this. But in this case, let's say, for example, we have what? A fake break of structure. All right. No build up, trend line liquidity below or above an inducement level. You know what that means? If you are selling, for example, right here, okay, you shouldn't have what? A build up or trend line liquidity, all right, above your inducement level. Let's say you have this and this, okay, and you are trying to sell from here. This is a low probability sell because you have what? A build up above your inducement level. Right? But in a case whereby you have this, okay, you have this, okay. It could be transfer of money, but the thing is, if it could be a transfer of money actually. All right. So yes, yes, it could be a transfer of money. Like price could do something like this, then mitigate this, then sell it. This could happen. Yes, yes. Okay. So behavior and delivery on if this is your 1 hour time frame, all right, on the 1 minute you need what? You need this, a delivery or behavior, then you sell to the downside. Then candle closure right here on the 1 minute. Then timing, that means 7 a.m. to 9 a.m., 12 p.m. to 1 p.m., 3 p.m. to 4 p.m. That is when this sell-off should fall in. So you have everything in place to take a position right here. All right. So I'm going to also send you this, going to send you this screenshot so that you can study it well. All right. So I will send you the plan and also send you the trade management in case if you have a question or anything. Yeah, brother. So let's go to the chart and I want you to pick a certain date we should back test. Sorry? No, we are only going to backtest a particular day. What day is that? This is Tuesday last week. Like I said, we're only going to backtest a certain day price action. Yeah, this is Tuesday. Okay. Wednesday, that's this price action. This, you want this? Okay. So let's Wednesday from Asia. That's 7. All right. So now when you go to the chart, right, the first thing that should come to your mind is where price is coming from. And where price is going to is really important because it is what is going to give you the chance to tell the points where you might be going to. All right. So first of all, let's activate our session box. Okay, this is Asia. You have Asia right here. Okay, you have Asia right here. And the thing is, when you go to the chart, okay, what you should always think about first is the fact that price taking a swing point doesn't mean what? A reversal. Okay, price taking a swing point doesn't mean a reversal. That is exactly what I want to explain. And I will always trade what I see, not what I think. Okay, this is like a pledge. Okay, price can disrespect my bias. Whatever bias you have, price can disrespect it. Okay, anything can happen in the market. You need to have that mentality. Anything can happen in the market. You can decide to buy with a very, very strong confirmation, and price will sell. All right. So you need to understand these four things that will keep you in check, that, you are going to be trading with probability, not just predicting, like I said, you're gambling. Okay, so this is the 15 minutes time frame. And what do we have right here? On the 15 minutes time frame, we have price in what? In an efficient level. Okay, we need to check where this low is coming from to understand that if price can what? Go to the upside. All right, now let's check where this low is coming from. All right, so it's going to give you a bias that price is likely, you see, price build up right here. Okay, so most likely price is going to what? Clear this low. Okay, so this stuff, because obviously nothing can hold price right here. All these are what? Build up. So this line is our first target, even if you are going to engage into a sell position. So you still have your Asia and you have price in an efficient level. All right. So let's see. It's almost Frankfurt. Price is in an efficient level. Let's go to the 1 minute time frame to check what we have. On the 1 hour time frame, do we have anything serious? Nothing. Everything right here on the 1 hour time frame is efficient. Okay, we have price is very, very efficient at this level. On the 15 minutes time frame, the only IPA we have has been filled. Even though you have a build up right here, this is not a build up. This is a transfer of money because a liquidity has not been taken. Yes, so liquidity has not been taken on the left down here for price to push higher for this to become a build up. On the 5 minutes time frame, what do we have? On the 5 minutes time frame, we have this liquidity also. So we are going to be taking note of this high, right? Let's refine our. Do we have this mitigated? If you have this mitigated, it's also nice. So we have a complete 5 minute efficiency, right? Okay, this is a momentum kick in. Momentum kick in. The thing is, on the 15 minutes time frame, we already have an efficiency, right? Efficiency on the 15 minutes time frame. On the 1 minute time frame, let's see what we have. Yes, we had a double inducement right here. Okay, so we have price giving what? A fake break of structure. And you have price giving what? An inducement. So you have a behavior right here. So the first reason we are selling is number one. All right. Yes, I can sell this directly because price tapped into this efficiency, but I might get taken out because. Sorry. Yes, it's fine. Yes. The main thing is you already you are in a 15 minutes efficiency, right? And let's see again. So the first reason we are selling is what? HTF build up. That is your 15-minute build up that we checked on the left. All right, this build up right here. This. Okay, this first build up on the left that we talked about. That is the first reason we are selling. No, not that yet. The second reason is your LTF build up. That's the one you're marking right now. Yes, yes. What? Sorry, the HCF or the LTF? That is the one we talked about on the left, which is this. Yes, yes. So the first LTF build up. So we have everything in place already. What else? What else do we have? A 15 minutes EPA, right? 15 minutes EPA. For we had a behavior. right? And we have Asia low right here, okay? Asia low, right? Since we already have a behavior and it is an inducement, so I'll be looking forward the mitigation of this inducement, okay? The mitigation of this inducement to look for any kind of opportunity. All right. Engulfing, what do you mean by that? Like price? Yes, price engulfed. So the 50% is the bearish candle engulfs the bullish candle. So engulfing mitigation is what we're going to trade in form of behavior. Yes, so we have this build up. Also, we have this IPA and we have this build up. Okay. We have this build up and we have this liquidity being taken. This liquidity right here. It is in our timing. This is 7 a.m. Okay. 7 a.m. That's Frankfurt. You know, you have to go to the chart 1 hour before London. 1 hour is 8 is London. So you go to the chart by 7. All right. So let's see if you have a retracement into this range. Are you sure? Okay, we already have a delivery. Now we have a delivery. 6, we had a delivery. All I'm waiting for is a bearish candle, and I'm going to press the trigger. All right. Let's have this in case. And our first target is obviously Asia low. Don't forget, we have this right here down. Okay. Our first target is Asia low. Okay. But then we need to understand that something is, the Asia low is a liquidity level. So we have to take note and be very, very prepared. So like I said, all these are the confirmations. Okay, the trend also, trend, like I said, price is bearish, right? 7, we have trend. All right. It is a 5-minute liquidity. All right. This is a 5-minute liquidity. So the more confirmations, the more reasons you have. The 5-minute liquidity is this. All right. So this is our first trade of the day, and let's see how it goes. Now we are at break even. We are at break even because price is at what, the 50% of this move. Okay. And there's nothing to hold price right here. Nothing. Absolutely nothing to hold price right here. All right. At this point, we are running 1:10, right? So what do you think we should do right here? Are you taking partial, or you leave it to run to this low? What are you? Okay, so we should let it run, right? Okay. So we are already at London, right? We're in London now. So nothing, no reason to buy yet, no reason to sell. We need the liquidity being taken. Okay. What is the time? Time is 9:41. No reason to buy. Price is mitigating what? A build up low. That means it's want to create a liquidity to push lower. We're still holding our position. No reason to buy. No reason to buy. Okay. So we have 9 confirmations to take a position from here. Okay, the low has been taken, right? So let's see. All right, all right. We are still holding. We are holding. So at this point, let's take 80%. Let's take 80% of this position, and on the left, let's try to see what price is reacting to. So we're taking 80% of this volume. So let's go back to our 15 minutes time frame to check if we can have anything to react with on the left. We have this low taking. So if you have to consider anything, all this inefficiency, it has to be this. If price should break below this, then this will be taken. This will be taken. So the only mitigation we are trading is this. All right. Let's see clearly. Okay, so this is the only mitigation we have to look out for. And price is heading toward it aggressively. So we have to be very, very careful in taking any position right here. All right. What is the time? Time is we are at pre-New York already. So by pre-New York, remember in our what I told session open, there's going to be like a manipulation at every session open. If price is going to buy, might end up seeing what? A huge sell-off first at session open, right? So this might what will happen. So let's see. We are going to be very, very careful in buying from that level because price can actually break through. No reason to sell or buy. Okay, mitigated. Now, we are in New York already. New York has started the huge sell-off, mitigation. Let's wait for a good confirmation before we look for an opportunity. We need a delivery or behavior. Okay, let's wait. All right. So we have this fake break, right? We have this build up, right? We have this efficiency, right? And we have a bullish candle close. This is a delivery. We have your mitigation on the. Let's see. If you take a loss, that means we have to wait for this low to be taken first before we consider any position. Your targets, all this build up first into this high. into this high. Oh shit! So we've taken a loss, and we are still heavily in profit. Remember, our 20% is still running. All right. So at this point, I'm going to take half of the 20% to make 10% running. Okay. All right. So obviously, if you look at structure, we have this and you have this. Okay. You have this and you have this. So you have this low being taken. All right. Which means what? A likely possible, let's take the last chance for this buy. And if this buy doesn't go well, we just leave it for the day. We already have two bullish candle close. Okay. So the first reason for buying is what? Let's list out our reasons so that if we take a loss, it has to be a valid loss. Number one, a 4 hours EPA. Right. Number two, you have a LTF build up above. Right. Three, we have a behavior for two bullish candle close. Right. Two bullish candle close. What else? What else? Anything? Okay, yes, I've written it. Yes, LTF liquidity, thank you. HCF liquid, that's this low, right? This low. Yeah, exactly the previous weekly low. Yup, what is the time right here? This is just 1:30. It's okay. That's a New York move. So previous weekly low taking. What else? What else? What else? What else can we talk about? Um, if this buy should fail, that means we have to look for an opportunity to sell. This is the last opportunity we have right here. So your first target is this. And obviously we have all this build up, Okay. This is 1:10. Obviously, price will come for this high. If this buy is going to hold, why? Because all these are build up. All these are build up. We have this as build up and this as build up. Okay. This is a weak high. Okay. So a good one, right? If it goes through, that means we took 3 trades today. All right. Okay. Okay. Oh, okay. It's all right, bro. It's all right. All right. So we are in profit already. Okay. Sorry. Let's see. So still in profit. At this point, I'm going to break even. Even though we still have inefficiency at my entry, I honestly going to break even because we are heavily bearish and I'm trying to protect my money. Right? So let's see. If we break above this, we take partial. Then take 50% and allow the rest to run. Okay. You mean you didn't buy here? It's if you are buying directly from here, it's actually aggressive. Okay. Because you need manipulation to engage your position. This is a manipulation that just happened. You have price taking this high and price taking this low. All right. But if you are buying directly from this, it's just like buying from a usual transactional liquidity. But you need a manipulation, a liquidity being taken to buy. All right. So people that bought from here are uh quite early buyers. Yes, like it's CLQ. Okay. So basically what you have here is just a behavior, sorry. Price taking the high and price taking the low. All right. Okay. So do you have any question before we move further? Okay. Let's see. So basically, what you have here is all right, all right, all right. So whenever I see something like this, it simplifies what they build up. Okay, you don't. Yes, that is why it's a build up because it's just a mitigation. Yes, yes. Whenever I see just a mitigation, that is a build up. All right. So this also is a build up. And the reason why price mitigated this was because what? It took out a liquidity, which makes it a value zone. Okay. So no reason to buy yet because we are trying to protect the first entry we have, and price is quite in a range, so you just allow it to run. Remember what I said, whenever we have a liquidity being taken, you're going to be seeing what? Transfer of money. All right? Liquidity being taken. How what? There was price delivery, I think. Okay, no price delivery, no price behavior. All right? So I think the only place I'll be getting into the buy is this after this bullish candle close I'll get in. Because this momentum to the upside is coming from what? Nothing. Just mitigating build up levels to create what? More build up. So that's probably at this point that I'll get in. Okay. So we're not taking partial yet. Well, as for me, I might have taken partial because we are heading to the next day. All right. Remember, I told you if you have a liquidity, if you have a build up above your inducement level, if you have a build up above your inducement level, it makes it a low probability one, like this. Okay. Yes, actually, sometimes so. Assuming we have this high coming from this. All right. Assuming we have this high coming from this. Then in this way, I could expect price to what? At least drop lower. But there's a reason why price didn't get to this. That means it has intention to go higher. Okay, intentions to go higher. That is why we don't have price at that level. Okay. So if I'm to buy again, it's possibly when this last build up has been taken. Okay. So for price mitigating this high without breaking it, it means what? Build up. Yes. So we're in the next day already. Asia, we are still having our position running. You sent me a photo. Okay. All right. Would you take? Yes, I will take a buy from here, unless if this high is not from a liquidity level on the left. Okay, but if you have just a mitigation like this, then this could happen. And also another thing to consider before buying from this POI is it has to be an MSC POI. Okay, this what you have right here is not really an MSC POI. You need to have a liquidity being taken on the left like this. Then you should also have an efficiency like this. Everything should be efficient right here. No, no, no. It's just a structure. You need to have a liquidity right here. Yes. Okay. Yes, brother. So you need to have a liquidity being taken right here to consider this as an MHPR. Sorry. If you have an MHPI here, then it brings us back to this low. Yes, if this low is what possibly reacting to nothing or reacting to series of this, that means there's nothing to react to that will push price higher. But if it's just an IPA level, okay, it means what price is giving this retracement to continue lower. Okay. Any more question? All right. What's buy is that? Let's say the buy. I think we are done with the back testing, right? Yes, we're done with the back testing. Let me save this. Last buy on Friday. This, right? No liquidity, no 5 minutes. I was actually waiting for this efficiency to buy. That was why I missed the buy. I was unable to buy right here. So I think I missed the buy also. Doesn't sit with our plan. No, if price didn't give efficiency. So I think that was the reason why I missed it. No, I didn't take this buy. No, it was this one I took. It was no, it wasn't this. Oh, you want this explanation? Where's this? Uh, Last Friday. Not this. It's this buy. Let's see. It react to something, I'm sure. Let's see on the 15 minutes time frame. Okay. I think I used this. I used this. Uh, was it this? Yes. No, let's go to the 1 hour time frame first. Okay, so let me start the explanation from here. Then 15 minutes time frame, there's a liquidity right here. Just this liquidity. It is a it is a 15-minute liquidity. I knew in my mind that price is going to bust through this low. Okay. But then there's going to be like a retracement. There's something that would cause a retracement at least for price to go to the upside in this way. Okay. Then keep selling to take this. That was why I capitalized in this buy before a sell off. Okay. So price took the liquidity. Then on the 1 minute, what do we have? On the 1 minute, this was my entry. I didn't take this first entry. Remember, when price is falling heavily, we look at what? TLQ. So it was this TLQ that was my first entry. Okay. Yes, the bullish candle closed and price came back for the mitigation. Okay. So it was this liquidity, then price came back for transactional liquidity. I entered. Okay. So you need to have something you are working on, either efficiency or liquidity. These two are the things that, um, thank you, brother. You are going to really, really enjoy this concept by the time you practice and you understand the logic behind everything. I think this guy took this buy because price reacted to an MSCPI. In 5 minutes MSCPI. I took this sell also. This, you mean this sell? No, I just reacted to it when it was closing. The first rejection, it was a news event. So I sold from here. When price took out the high, aggressively and returning back into the range, I engaged. Okay. Are you with me? All right. So the second buy within the range, if you're trading within the range, it has to be an MSCPI. Any more question? Okay. So for the psychology aspect, I think you basically know what you're looking for. So you need to follow the trade plan and understand that price can disrespect whatever you have. Okay. Price can disrespect whatever you have. Now, this script that I'm sending to you, you don't have to send it to anyone. And the reason I'm sending it is because you need to also develop your own. If this that I gave you is what is going to be enough and okay, no problem. But I would advise you have your own personal one and try to follow it. Okay. Yeah. Okay. Okay. All right. So confidence, self-doubt, fear of missing out, revenge trading, impatience, fear of losing, fear of not good enough, greed, emotional inconvenience, and all. All right. So these are the things that is going to affect you in your trading. So I want you to study this. All right, brother. In case you have any question or anything you need to, okay, you are requesting for a seventh session, just let me know when you want to have it. Next Friday? Yeah, it's okay for me. Yes. Yes, that would be nice. That would be nice. All right, brother. Yes, yes, yes. Thank you. I will appreciate that. You can send it to me after this call. And I want to detail if you can make it detail, no problem. All right, man. Amen. 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 And you too, brother. Thank you. All right. Have a good day, brother.